Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, last day of the week as we go into the weekend. It's not a long one. I think the last one was, guys, right? The last Friday, I think Thursday was the last day.
No holidays in September.
No holidays in September.
And Monday, the money markets are closed. So rubbing salt in the wounds of all the equity players.
All RBI holidays, no, all stock market holidays are RBI holidays, but not all RBI holidays are stock market holidays.
Two of them.
A point to start the show on. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel and Surabhi with me. Guys, morning.
Well, good morning. Market's a little bit jittery, but good times, right? Today's Onam, I think, at the last day. Happy Onam, Prashant, to you, your family, and all our viewers as well out there. And it's Teachers' Day as well. So happy Teachers' Day to both of you. Learned a lot from you all over the last few years.
Likewise.
And all our viewers as well. We learn from each other. And in fact, wishing all the teachers, my teachers, all of your teachers as well, a very, very happy Teachers' Day. Let's keep learning.
Absolutely. And of course, the biggest teacher of all is the market, right?
Yes.
Which we learn from every day in ways that we don't understand, but we eventually do kind of understand. Accumulated body of knowledge. And of course, that Onam wishes, Nigel, thank you. Surabhi, thank you. And in Malayalam, we say, Ona Shamsagal, which means the greetings of Onam.
Oh, lovely.
I don't think I'm going to be able to get out of the studio to get a nice Onam Sadhya, but we'll figure something.
We'll figure. We'll keep reminding you that that'll happen. And by the way, guys, I mean, it's been an interesting week for the market as well. In the midst of festivities, the Ganpati festival will be winding up, Eid, Onam. The GST bonanza has happened. But despite all the talk, all the sound, all the festivities, market hardly changed.
No, absolutely. And I think we'll talk about that in just a bit. Let's just take it from the top, right? And U.S. markets, for what it's worth, because it kind of sort of has faded into the background, what's happening in the U.S. It's very much local-driven events which are leading and, sort of moving the market here or there. At least the expectation is that it's going to be a dominant driver. So far, that has also not worked out. So S&P ended about 0.8 higher, NASDAQ about 0.9, almost 1% up. So U.S. equities, by the way, hitting new all-time highs last night. There is the big jobs data tonight, and I think it's important. Remember the last monthly jobs data, we came out that Monday, and the market really had a big move on the back of that jobs number. It was a shocker. So this one, in that sense, is going to be important. The consensus expectation is 75,000, but I think the whisper number is about 85 to 90,000. We'll see how this is going to come out. It comes out right at U.S. market opening bell. ADP jobless claims data last night, it kind of sort of added to the evidence of a cooling labor market in the U.S. The macro markets, the 10-year yield was down about 5 basis points. You had the dollar index, which didn't make a big move. It was kind of flattish. Oil prices continue to drop a little bit, nearly 67. OPEC Plus is meeting on Sunday, and there is a concern that there's going to be more oil in the market, that they're going to once again increase supply, boost supply. Now I'll just circle and tie in the levels here. So the Nifty and the market broadly cooled off quite a bit, and so much hand-wringing and anxiety about why is the market not doing well, even though we've got the GST cuts, which were on anticipated lines. But I think, without getting, I don't think there's any reason to be pessimistic. This is long-term positive. We said this yesterday morning as well. Long-term is one thing, trading is another. In trading, what matters, of course, many times, more than, the news event itself is the pre-positioning. People were prepared for it. I mean, as I said yesterday, we reported point by point and down to the last T. Our colleague Timsy had reported on what items, what rates are going to come, and they all kind of were exactly the same what we had reported. Markets have done very well. The auto index was up 7%, consumer index was up 7%, the FMCG index was up 4%. That is 14th of August till the day before yesterday's close. So a lot of pre-positioning into events like this always is the case, but that does not mean that the event itself is somehow diminished or its importance in that sense is diminished. So, having said that, the levels are up on your screen. The Nifty resistance, let's just start with the support, 24,522. That's a support, immediate support for the Nifty. Resistance, 24,878, which is the 61.8% retracement. Same level. Yesterday, that level got taken out, and then we ended far under it. So that's the first one. And then yesterday's high, which is 24,980. So 24,878 retracement, and yesterday's high, 24,980. And of course, support's up on your screen as well. For the Bank Nifty, the support is at the low of 53,561. You could look at retracements, you could look at hourly averages, but I think, the important one on a daily average basis is the 20-day. Bank Nifty, of course, the weaker of the two indices, has been for a while. 54,905 is the 20-day moving average as far as the Nifty Bank is concerned. So that's the setup. GIFT Nifty implying a 61-point higher start. Nigel is standing by with what the F&O stats look like. Nigel, over to you.
Well, we went through a phase where even bad news is being ignored. Now, what we have seen the last week or so is even good news is getting sold into. You've got a great GDP print. You've got that GST boost as well. And yet the market is not rallying big time. So that's the kind of phase we are in. But before we get to the trade setup, just want to point out to our viewers that, there are going to be a couple of settlement holidays. That's on the 5th as well as on the 8th, which is today as well as on Monday. And important to know that any share that you bought yesterday, today, or even on Monday, the settlement will happen only on Tuesday. So Tuesday effectively is a big settlement date because there are going to be 3 days where the settlement is going to take place on Monday. What that effectively means is when you buy any of these shares, you'll see it in your account only on Tuesday, that too in the second half of the day. So just want to put that, and that could create some kind of margin headwind just in the near term, because there'll be some kind of, margins that will be a little bit crunch. So just keep that in mind. The good news, though, is that tomorrow the banks are open. So at least there'll be some kind of movement. Moving to what kind of trading action we saw yesterday, the FIs went ahead. They had a short position to the tune of close to around 6,000 contracts, which took the short positioning in percentage terms at around 92%. And now you have the net short positions over the last few trading sessions, last 1 week or so. It's moved up by close to around 10%. So the FI net short positions are at around 1.88 lakh contracts, while the clients continue to remain net long. Short positioning at around this 1.9, around 2 lakh contracts, you'll be bracing for that short covering bounce. The problem is it's not durable, and the FIs continue to pile on the shorts. Moving to the PCR, then that danced away to around 1.2. That's come back to around 0.8. And yesterday, there were 2 strikes that were very active. But the call writers, they came back into play. Just take a look at the 24,900 call. Massive open interest built up. The open interest built up was close to around a crore. While on the downside, the put writing is still a little bit jittery. You can just look at the kind of built up. You've seen only 20 lakh shares out there. But that's the important mark, with premium at around 120 rupees, which gives you a broad range that we're looking at on the Nifty itself. So the recent high, the recent low, that becomes the important mark. So that's the broad range, 24,405 and yesterday's high. That's the range. In the near term, today, by the end of today, you'll want at least to defend the 20 DMA. We're 40 points away from there, so you'll want to defend that mark. And then you'll want to move up. Yesterday's high as well as the 50 DMA around the same levels. The Nifty Bank, that needs to find its form now. It's been a bit of an underperformer. But those are the important marks you're looking at. For today's trading session, you'll want it somehow to get past that 54,500 odd mark. That's going to be the important mark. And the reference point on the downside comes up for you on the screen. In terms of stocks that I'm looking at, Aptus, there was a large trade yesterday. That got cleared out. The stock actually in the last 1 month was a relative underperformer. Post a large trade getting out of the way, and if the management can get their act together, I'll keep an eye out on this stock for today and for the next few trading sessions.
Okay, all right. Well, by the way, if you're looking at the market overall, 5 trading sessions, right, and we are better off than where we were on Monday. There's no taking away from that. The Nifty is up about 1.2% so far this week. The mid-cap index has done even better, over 2.2%. And individual sectors, autos, metals, let's not forget, the rally is between 3% to as much as 4-5% on some of these sectors. So overall, it's been a good week, and let's see if Friday can add to the tally. Asian markets, by the way, are holding up quite nicely. Japan, China, all these markets are up. On Japan, the good news that came in was that those auto tariffs have been formally lowered, and auto is a big export for Japan. So that's what's driving the Japanese market. Hong Kong's up as well. Taiwan, mainland China. Most markets are up. So let's see if this rubs off on us. Let's pull up the implied open as we move along. Like I said, we've already added about 1.2% on the Nifty, and it suggests that the opening is going to be about 62 points higher. Okay, let's get to the equity call of the morning then. Yogesh Agarwal of HSBC says that the pro-growth initiatives adopted by the government and central bank this year have turned the environment more favorable for Indian equities. He says these GST changes combined with benign inflation, income tax cuts in February, and accommodative monetary policy create an environment for sustained growth. He says a revival in demand should also provide a much-needed boost to private sector capex that has been sluggish for several years. That's a view from HSBC coming through. Cameron Brandt, Director of Research at EPFR Global, is joining in to talk about the direction of money and where it seems to be going. Cameron, good to have you in. Even last time when we were speaking, you were telling us that some of the other emerging markets like China, South Korea, they've been attracting a fair share of dollars. Tell us what's the latest flows data pointing out, how are EM funds overall doing, and India dedicated funds, any noticeable, change or reversal?
So the headline number is fair, but not particularly stellar for emerging markets equity funds. Inflows have been fairly consistent, but they've not been hitting peaks that we've seen certainly last year. That said, the interest is broadening, and that includes India. This past week, dedicated India funds posted their first inflow after 5 weeks of outflows. And there's certainly a lot of talk about emerging markets and the value they offer. And we've seen very steady flows now into the diversified global emerging market funds, which are usually the precursor for liftoff, but it still hasn't quite happened yet.
So that's good news. I mean, you're saying that there's some reversal. After 5 weeks, India dedicated funds are also pulling in the money. What about China? Because when we speak to a lot of fund managers, there seems to be a fair amount of interest, global interest in Chinese markets as well. So what's happening there? And any other, key shifts? What about US flows? They continue to be fairly robust because the market's been hitting newer highs on almost a daily basis.
Right. So starting with China, we're starting to see flows return there, but not exceptional. People aren't jumping in with both feet, at least not yet. What we have seen is a definite sort of reversal of flows to the previously quite popular GEMX China fund group, one that was growing quite aggressively last year, and is still adding new funds, but not seeing much fresh money. U.S. equity funds in some ways parallel China. They're seeing okay amounts of fresh money, but it's not what you might expect given the stellar rebound of the major indexes through this summer. We did see, since I last talked to you, a hiatus in the rotation to Europe story, though flows turned positive again this week. But there's definitely some investor anxiety that the fiscal stimulus, driven in part by the need to rearm that they were penciling in for Europe, is threatened by both the possibility of a ceasefire in the Ukraine and that markets may start to impose fiscal discipline through bond yields.
It's a pretty poor line, technical issue there. Cameron, we leave it there for now. Thank you very much for joining us. And we hope to talk to you on a better line and maybe with better news in terms of flows as well. Appreciate your time here on CNBC-TV18. Let me just quickly run you through the interactions which are lined up here on the program. 8:35, we have the management of City Union Bank to talk to us about their F526 outlook. 9 o'clock, Hiten Mistry of Equirus will join us on the impact of GST reforms on the FMCG space. Sridhi Bhattacharya will be with us at 9:20. He's a market master of the day. 9:35, the management of Bata India. Footwear stocks all rallied yesterday sharply. VMart will be speaking with us. Again, another space where perhaps at the mass level there is a big impact, big delta. We spoke with him, by the way, going into the GST meeting. And of course, in our special segment, Indianomics, Lata will be in conversation with Neelkant Mishra and Ashish Gupta on macros markets and how they stack up after the GST cut.
Time to slip into a short break. On the other side, we go full tilt on stocks that we're looking at for today's top 10. HDFC Life, ICICI Pru Life, SBI Life, Sri Digvijay Cement, Saman Capital, Aptus Value Holding Finance, Zydus Life, Aarti Drugs, and Bharat Forge, all of them will be reacting to positive news flow, while you have Biocon that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Qs are actually pretty good this Friday morning, and it's been a good week, all said and done. We are up between 1% and 2% on the indices, mid-cap, bank nifty, and the nifty itself. And the implied open is telling us that we'll start another 60-odd points higher. Let's see where it is now, 64 points higher. So the bills will want to continue with the momentum and close Friday on a high. So let's see if that happens or not. But there are, of course, individual stocks to take note of as well. And our team is standing by with the list of top stocks to watch for the day. Guys, morning to all of you. And finally, thank God it's Friday. So let's start with the insurers. They were dominating the news action yesterday, trying to figure out life post the GST changes. And we had some exchange notifications from some of the companies. So tell us more.
So yesterday we saw that all these insurance names have slipped in trade, and they were like down almost 3 to 4% from days high, and that was on the back of GST Council announcement. GST Council has exempt all the premium that you or I pay on our insurance from GST. So it might be a relief to customers, but the big question was, will this impact on embedded value of life insurance companies? So now these companies have released statements. So first, HDFC Life is saying change will spur demand over time, and that will be accretive to value new business. And it sees less than 0.5% impact on embedded value, and it maintains its target to double its VNB over next 4 to 5 years. Next is SBI Life. It sees an impact of less than 0.2% on its embedded value due to transition in this tax regime. And ICICI Prudential, because it's ULIP heavy, it sees an impact of 1% on its embedded value. So I won't be surprised if we see a recovery in all these insurance names in today's trade.
Okay, all right. Thanks a lot for that, Sid. Well, I'm looking at Sri Digvijay Cement, and there are two pieces of news. The first one, the promoter entity True North Fund, they have gone ahead and they've agreed to divest 50% of the 55% stake they held in the company to India Resurgence Fund. That's the platform that's backed by the Piramal Group and Bain Capital. The sale will take place in two tranches. The price is around 85 rupees that their deal will be done, implying a deal value of approximately 630 crores for the 50%. That translates to around $80 on a per ton basis, based on the company's integrated cement capacity. The transaction obviously will trigger an open offer for the additional 26%, and that will be at around 92 rupees per share, which is around where the stock price is. The second piece of news is Sri Digvijay Cement has also approved a 10-year exclusive cement distribution agreement with Highborn Cement. That's going to further strengthen their presence in Gujarat. As part of the agreement, Sri Digvijay, well, they'll extend a refundable deposit of around 400 crores to Highborn, and the distribution agreement will be valued at around 600 crore rupees annually with some kind of provisions for revisions. Now, Sri Digvijay Cement, they have the option to go ahead and acquire 100% in Highborn within 8 years. Together, both the companies, well, they'll become a larger entity. The grinding capacity goes to around 6 million tons odd in a very, very competitive Gujarat market. But since this deal is out of the way and since they have a strategic plan going ahead, going with green on Sri Digvijay Cement. But, let's go across to Gaurav, who's here. Gaurav, good morning. I think they dressed us up alike today. Inch pinch. But you're tracking two companies. Tell us more about them.
Yeah, two NBFCs in focus today. First is Sanman Capital, and the reason being that Mr. Himanshu Modi has been appointed as Deputy CEO here. Now remember, Modi comes from the background. He was CFO, Group CFO at Suzlon Group. And when we look at Sanman Capital also, fundamentally, there are a few changes that we have noticed. From FY29, we have seen AUM has declined almost by 50%. But at the same time, when we talk about AUM growth from here on, we see some kind of green shoots. And the reason being, management has said that by FY27, they want to reach this AUM growth at around 1 lakh crore, which implies more than 20% CAGR growth. And at the same time, they are also saying that the legacy book will come in single digits. Currently, it is at 37%. So definitely some green shoots we are seeing in the fundamentals as well. Other than that, Aptus value, this stock is in focus. Yesterday we saw a block deal where Westbridge offloaded almost 8 crore shares, but we saw some prominent investors in the likes of Eastbridge Capital, and at the same time some mutual funds like Aditya Birla, ICICI Pru. Along with that, when we talk about fundamentals here as well, we are seeing that the company is eyeing for 25,000 crores of AUM by FY29, which implies 24% growth from here on. So definitely both the stocks fundamentally as well as some news flow which is positive, which can impact the stock today.
All right, so two financials, right? And we'll dig deeper a little while from now on both these names with Gaurav. So that's Saman and Aptus. Well, Biocon and Zydus Life are the next ones we want to focus on. Vinny is here with details. Vinny, good morning.
Hi, good morning. So keeping an eye out on Biocon because of some bit of a subdued or a somber news coming in here, as you could say. The US FDA has completed inspection in its Biocon Biologics facility. They've given 5 observations with the Form 483. The observations, the company said, is going to be procedural in nature, doesn't pertain to any data integrity or anything related to compliance front. And the company is also highlighting that they don't expect an impact coming in on the supply front, but an important facility for the company. So that is why we could see red on the screen for this one. Zydus Life now, that one has signed an agreement with Synthon, and this is an exclusive agreement, licensing agreement. In this, this is going to be for ozanimod capsules. This is in the US market. The market size of this capsule is around $637 million in the US, and this is according to the IQVIA MAT July 2025 data. Now, in this, Synthon will actually be obtaining all those final regulatory approvals. They will be manufacturing it as well as focusing on supply as well, while Zydus will manage the commercialization of this drug in the US market. One advantage that comes in for them in the short term is that they are one of the first filers for this drug, and that is why they will have that 180-day exclusive period as well. So in that short term, they could see a lot of benefit on this front.
Okay, all right, Vinny, got it. So we'll keep Zydus Life on our radar as well. Let's get to Ria. Ria, you're watching out for Aarti Drugs and Bharat Forge. Morning.
Good morning. First, taking a look at Aarti Drugs, the company's new manufacturing facility in Gujarat has commenced commercial production with effect from the 4th of September. Now, they have a capacity of 60 metric tons per day with the current utilization at 1/3 of the capacity, and the plant is expected to reach full capacity utilization over the next 12 to 18 months. Now, this unit is going to manufacture DMA MMA as well as TMA and their derivatives, and this is going to cater to domestic demand first and then go into export markets based on their potential. The next stock that we're looking at is Bharat Forge. The company's step-down subsidiary has inked an agreement with Andhra Pradesh's infra agency to buy 950 acres of land, and they are going to undertake the development of an end-to-end defense energetics manufacturing complex, and this is going to include high explosives manufacturing plant, an ammunition filling plant, and a gun propellant facility, as well as provisions for future expansion into energetics for rockets, missile systems, space launch vehicles, and this will also be followed by advanced energetics. So positive news flow for both of these stocks expected to open in the green today.
Okay, all right, Ria, got it. Thanks very much for those few names. Let's quickly recap a list of all the stocks that we should be watching out this morning. The ones that have positive news flow would be HDFC Life, ICICI Prudential Life, SBI Life, Sri Digvijay Cement, Saman Capital, Aptus Value, Housing Finance, Zydus Life, Aarti Drugs, and Bharat Forge. Biocon is the only stock with slightly negative news flow around it today. Okay, so that's the stock list for the morning. Let's figure out what's happening in the world of commodities. Manisha is joining in with the latest. Hi, Manisha. It's all eyes on the US jobs report, right? The private sector report was a little weak, but I guess I'm sure this mega jobs report will even weigh on the commodity markets.
Oh, yes, it will. So it is going to be the U.S. non-farm payroll data that comes in today that would, make base for the next U.S. Fed policy meeting, which is also in this month itself. So, well, absolutely all eyes onto that one. And we have seen some strength in U.S. dollar ahead of that. And that is the reason you're looking at some profit-taking coming in for gold and silver. In any case, that was expected because we've seen all-time highs and a string of that for both gold and silver. So slight declines here at this point in time. The markets also will watch out for expectation of lower interest rates by the U.S. Fed, and that is what would set course for further price moves. In the meanwhile, you have the crude oil prices as well declining for a third straight day, and with that, we are headed for a weekly decline. What also the market will watch out for is the September 6th OPEC Plus meeting. A potential production increase is on cards, and that's weighing onto the markets right now. The U.S. crude inventories also have jumped, and that's also weighing. And then the markets also are watching out for the latest statements coming in from U.S., where the President Trump has urged now Europe to halt completely the Russian oil imports. So there still is a lot of sentiment, data, and events continuing. But today is a day when you have seen commodity markets under pressure.
All right. So Sunday, working Sunday, Manisha, then, right? Manisha, can you hear me, Manisha?
No, she's silent now. She's chosen not to respond.
She's disconnected.
Okay.
So I'm going to get a call later. Thanks very much, Manisha, for that. If you can hear me, that is. We'll take a quick commercial break here. We're going to come back. Okay, I think, apologies. What we'll do is, before we take a break, we'll get you the brokerage calls of the day, and you've got a couple of interesting ones. So take it away.
So first one is insurance. CLSA has come out with a note. It says that GST changes could result in up to 1.5% hit on embedded value of life insurance. Drag on fresh book can still be managed by price hikes and commission cuts, but the problem is the back book, which has the less flexibility, and initial assessment indicates impact on EV in the range of 0.5 to 1%, which all these companies have also announced. HDFC Life says less than 0.5% impact, SBI Life says less than 0.2% impact, and ICICI Prudential says 1% impact on EV due to change in tax regime. Next on ACs, Jeffrey says GST rate cut on AC could help boost volumes and liquidate existing inventory, which would be positive for Voltas, Blue Star, Amber Enterprises, and Havas. So it has raised FY 27-28 estimates for these companies in the range of 4 to 8% due to volume boost. It has a buy call on Voltas and Amber and hold on Blue Star and Havas. Last one, Motilal Oswal has done on QSR companies. It has upgraded Swiggy to buy, and target has given is of 560. Maintains buy call on Eternal, and target is 420 per share. It says there are multiple tailwinds going forward, and it has raised food delivery growth estimate for both these companies for FY 26-27 in the range of 21 to 23% and now values food delivery business at 35 times FY 27 adjusted EBITDA versus 27 times earlier.
All right. So thank you very much. So those are some of the brokerage calls on Sud's radar. There are more which we will get to you in a bit from now. We're going to take a quick commercial break here. We'll come back Parag Thakkar of Fort Capital will be with us for some fundamental stock conversation. Stay tuned. Coming up.
Well, moving on to a Network 18 exclusive, Commerce Minister Piyush Goyal says that the India-United relationship is the most consequential. Goyal also said that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration. Let's listen in.
Till about July 6th or 7th, things seem to be going fine with in our negotiations with the US. Then in a matter of weeks, we had a tariff of 25%, then another 25% on top of that. What went wrong in these few weeks?
Well, I think the US-India relationship is one of the most consequential relationships on the globe today. We are two very large democracies. We believe in the rule of law. We are allies and friends for long. We have had certain blips, like we had the sanctions post the nuclear tests in 1998.
Yes.
I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come.
And how soon do you expect things to resolve?
It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship where we contribute to each other's economies in different dimensions and will continue to do so.
It's comforting to hear these words from you. And we also picked up that you said somewhere that things could happen as soon as November. Is that a correct?
Well, if you recall when Prime Minister Modi and Honorable President Donald Trump met in February, they had tasked the two teams to conclude the first tranche of a bilateral trade agreement by fall of 25, which is about November 2025. And I'm sure we will continue to be engaged to try and find solutions to reach that outcome. If at all it's give and take a few days, a few weeks, a few months, in a nation's history, such small periods will not define long-term objectives and goals.
I think what surprised and even shocked some people was the erratic and incendiary language that was used by, some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
All right, well, let's welcome our guest, our fundamental guest today. We have Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good to see you in. It's a long time since we spoke, but happy to reconnect. Parag, we've got a lot of stocks that are in focus. Top of mind is going to be these insurance names, that the GST rationalization has put those stocks in a bit of a tizzy. Now, HDFC has come post-market hours and, in fact, put out a clarification as well.
Yes.
What's your view on these names?
So I completely agree with what HDFC Life has written in the BSE announcement, that it is going to be a structural positive for long term. Because if you are a customer, for example, your IR improves and the persistency ratio for insurance company also improves. They might have to take some price hike, 4-5% to offset for input tax credit. But I think that's a short-term negative, which I think they have captured it well by saying that the impact will be 0.5% or lesser than that in embedded value. So even if we say that short-term impact is, say, 1% of the embedded value, but long-term structural tailwind has come in the sector. So I would say that it is a positive, and I'll be a buyer of HDFC Life at least on any dip if market has some confusion around it.
Parag, good morning. Good to see you. I think we're speaking after years. And hope this is the first of many interactions.
Thanks, Prashant.
Parag, in the consumer space, so insurance we touched upon, in the consumer space, on the back of GST, are there any durable themes? I mean, it's a combination of durability and what is already in the price. So are there any companies which match both buckets?
See, I'll tell you, for example, we had HUL, Dabur, Marico, Havells in our portfolio in consumer names. And I would say that, just to conclude that because they had, or even we have, for example, Mahindra, Maruti on the auto side, Motherson Wiring, Seat. These are some of the names which are in our portfolio, which represent this consumption theme, plus which benefit from GST reductions. And let's say yesterday's selling, I will not look too much into it. Market is always like that whenever news is out, market sells because everybody books profit. So, but the benefits are very structural in nature, and you will see as we begin the festive season, in some of the things like small cars, I am anticipating good demand come back, and I am also playing banks like HDFC Bank to play that theme. See, remember, HDFC Bank is one of the most undervalued Nifty stock at 2 times price to book on FY27 at a PE of 15, which can, and from next year they'll outgrow the system because now their CD ratio has come down. And don't forget that they are deeply penetrated into rural and semi-urban areas, and very, very deeply penetrated into auto dealerships and consumer durable shops. So they will surely benefit in my view, and valuations are absolutely comfortable. So I would say that I am playing this theme through many names, and I would love to do so again because I feel that yesterday's reaction, profit booking came. It is very simple, normal thing for the market nowadays.
Yeah. So Parag, hi, morning. Parag, within consumer, and there are different parts to it, right? You could pick an AC company like maybe a Blue Star or a Voltas, or look at apparel, small ticket size apparel, something like V-Mart, etc. What are you most convinced about when you're talking about urban consumption, a slightly lower level urban consumption? Which is the best stock play? There could be trend as well. I mean, But you tell us, say top 3 picks for urban consumption.
So I told you how I'm playing it in my portfolio. In large cap space, I'm playing it through HDFC Bank, Reliance.
Through the banks, yes.
So Reliance, for example, don't forget Reliance is a large retail business. And nowadays, out of the SOTP, large contribution is from retail. And if Reliance Retail also benefits after in the festive season, the definitely value accretion will happen. So I would say that I'm playing it through HDFC Bank, Reliance kind of names, Geo Finance kind of names in the large cap space. Dabur, Marico, HUL, as I said, Maruti, Motherson Wiring, Seat Tires, Havells, all these names are in our mid cap and small cap space. Of course, some of them are very large, but these are our consumption themes which we would like to bet on. And see, I'll tell you, the other thing is there are some consumption themes which will benefit straight away from this festive season, like small cars and hence Motherson Wiring. And there are some structural beneficiaries like tire companies. For example, tire companies, 70% sale happens in replacement market, right? And now GST has come down. So they will have some margin tailwind also going ahead. Same way insurance. Right now, there is a confusion regarding input tax credit and so embedded value. But structurally, long-term perspective, if you ask me, it's a very big benefit for the consumer.
Okay, Parag, stay on. We'll have more questions for you in just a bit. Let's also get a conversation going. We are, looking at how banks perhaps stand to benefit from the GST cut and the whole consumption thrust as well. So the next company on our radar is actually City Union Bank. Mr. N. Kamakodi, MD and CEO of the bank, is with us to take the conversation forward. And we're focusing on 3 key points. Of course, we want to understand whether the MSME segment will keep firing for the bank as well as it has in the last quarter. Their margins have been sustaining and they've been guiding for margins above 3.5%. So is that still on track? And of course, a quick check on the asset quality as well. They've said that it'll be negative net slippages for FY26. So are they still as optimistic? Let's find out. Mr. Kamakodi, thanks very much for joining in. I want to start by first getting a sense from you as a banker with such a big, change happening on GST across the board. And then there are second order effects and, third order effects. Does that improve your overall projections for the growth of the book? I think earlier when we spoke, you said that you're looking at a loan growth of mid-teens. Could it be higher? Could it be the high teens now, given what has happened?
See, there is definitely there is a possibility, and we are evaluating that, and we will give the exact strategy along with our second quarter results. We are in the process of making that happen. Looks like overall you are getting some oil into the growth engine for the economy as a whole, which would also directly getting involved into the, improving overall growth of both GDP, also getting translated into the credit growth. So we are evaluating, and the initial estimates looks positive, and exact numbers and how we are going to do, we are in the process of making our things to take a proper shape. We will be in a position to announce that along with our second quarter results. We will take some time to crystallize that, how we are going to execute that and what we are going to do. And we will overall, this is extremely positive compared to whatever we started the year with.
Sir, I understand that you can't give us a specific number for your bank right now. You'll only get to it in the next couple of days. But system-wide, credit growth has been pretty anemic. It's been either high single digits, about 10% odd. System-wide for this year, FY26, across the banking system, what should be the loan growth expectation? There are RBI cards which are flowing through the system, and now there's the big GST change.
Yeah, overall, our expectation for the system as a whole, it should be improving to maybe to start with teen, maybe lower teen. Earlier, it was just 10 to 12% was the number which was getting repeatedly spoken about. But now it looks we should be in a position to see that, slightly another 1 or 2% incremental thing because of both in terms of the, the loans given to the businesses and also the loans given to the individuals. So overall, we can expect that, and our strategy always had been to have 2 to 3% over and above that of the, let's say, growth of the industry. I think we should be able to have that. We had a very decent growth in the first quarter, and that momentum is continuing. We hope it will be sustaining, and probably it will inch up is what we expect on growth front now.
Mr. Kamkodi, good morning. And this is exactly what Sanjeev Bajaj told us as well. He actually mentioned exactly these two segments, MSME and consumer segments, personal loans in that segment. These two are what percentage of your book?
See, the MSME sector is close to 40% of our book, and we are not very active in consumption. And we also have a significant portion in, let's say, the MSME, commercial trading, wholesale and retail, agriculture and gold loan together constitute about 80% of that. In our overall loan book, at least 50% of our book is in the segments which is expecting a boost because of the recent announcements.
So within MSME, which is 40% of your book, you said, and anyway, I mean, in the first quarter, it showed a lot of traction. For the full year, what is your expectation from your MSME growth?
So that's what we had given is that our target is to maintain about a couple of percentage point over and above the growth rate of the industry, and that expectation, whatever we share, it continues. And as we expect the industry also to take at least 1 or 2% more because of the announcements, the same level of, let's say, transformation or transfer may also happen in our case. And we are in the process of working out the nitty-gritties.
Okay. Quick word on margins, sir. Again, you've done better than most banks in terms of curtailing the pressure. And you've been talking about 3.5%. Are you on track with those projections?
Yeah, absolutely. As we shared during the, let's say, first quarter results, that could be a few basis point pressure in the second quarter, but the repricing of the term deposits gets complete from the third quarter onwards. It will get offset in the third and fourth quarter. Year as a whole, as we had, let's say, conveyed, our expectation is that we are very well on the track, and we are very much positive on maintaining the margin for the year as a whole.
Mr. Kamkodi, we'll leave it there, sir. Thank you very much for joining us. It's a pleasure, and good luck to you. And I hope not just for you, but for the industry as well, what's happened lifts system-wide growth. Sanjeev Bajaj, we spoke with him yesterday, chairman at Bajaj Finserv. There's, of course, the consumer business, there's the insurance business, but just want to play out the soundbite on the consumer side of things in terms of how he thinks this will, benefit the consumer segment, especially. Actually, he started by saying that, the first disproportionate impact, positive impact, is on financials themselves. Listen in.
Some of the rationalization moves beyond the rate cut should just also help in formalizing, getting more MSMEs to come in, sign up under GST, so formalizing the economy as well. Even the operationalization of the GST appellate tribunal and simplification of structures should strengthen compliance and trust in the system and broaden the overall system. Any such dramatic change in the economy first impacts financial services disproportionately, because it ends up supporting or enabling so much of the real economy. And that can work both ways. In this case, naturally, it is the positive step. So there is a hopeful positive move. I would directly look at both. On the consumer side, consumer spends should go up dramatically in the coming quarters. In addition, we have a large lending portfolio to MSMEs. That should benefit as well.
Okay, well, MSME, consumer, across the board, benefits should show. Stock was up 4%, as you saw. Bajaj Finance there. Parag, of course, is with us, but we'll also get you some technical setups and some technical trading ideas. So take a break. Shrikant and Mitesh on the other side. Stay tuned.
Welcome back. Well, let's hop across to Hormuz. He's here to tell us about all the big movers in trade yesterday that moved on rather large volumes. Hormuz, take it away.
Morning, Nigel. And some news-driven names, of course, and some not so. I'll start off with Sri Digvijay Cement, of course, the one that is in the news today. But the trading activity over the last couple of weeks has seen a significant increase. Now, take a look at this. In the 51 trading sessions that we compared before the 18th of August, the average daily traded volume was anywhere close to around 3.5 to 4 lakh shares. But since the 18th of August, we have had 13 to 14 trading sessions. And during those, the average daily traded volume has increased to 15 lakh shares. Even yesterday, we had almost 22.5 lakh shares traded. And courtesy of this heightened trading activity, the 20-day average volume has also increased to around about 14 lakh shares. Now, even for the delivery front, almost 8 lakh shares were marked for delivery, compared to a 20-day average of close to 5 lakh shares. And during this period from the 18th of August, the stock had also hit a 52-week high of in excess of 100 rupees recently before correcting. Now, the other one is Atul Auto, and the stock was up 18% in yesterday's trading session. And the volumes that were had on the stock yesterday were the highest that it has had on record. And 38% of the company's outstanding equity in terms of the total number of volumes that changed hands. And the total turnover yesterday of 530 crore is also almost 38% of its total market cap, which comes up to around 1460 crore. Now, yesterday's session, the volumes yesterday, almost well over 1 crore shares. That was almost 106 sessions worth of volumes put together. And that was also higher than the 20-day average, which is only 61,000 shares. Now, from the delivery front as well, almost 8 lakh shares were marked for delivery. And the 20-day average here is only 23,000. Now, that's Atul Auto. Of course, the one theme that made headlines yesterday was insurance. And HDFC Life, ICICI Pru and Niva Bupa, all of them saw heightened trading activity. HDFC Life and Niva Bupa saw excess of 1 crore shares being traded, all of them in excess of their 20-day average. And even on the delivery front, HDFC Life had around 42 lakh shares, Niva Bupa had almost 70 lakh shares, and all of them were marked for delivery well above their respective 20-day averages as well.
All right, Hormuz, thank you very much. Very, very interesting sort of link there and data really coming through. Let's just, Parag is still with us, and we have more that we want to talk about, Samman, Aptus, etc. Parag, of course, already ran us through his views on insurance, long-term positive and some of the short-term hits perhaps manageable in that sense. Yes. You heard, two financial companies, Parag, City Union, of course, and of course, Bajaj Finance and Bajaj Finserv, Sanjeev Bajaj there. Yeah. Any thoughts? What are the best plays here?
So I've been playing it through HDFC Bank, I said, as the largest weight in the portfolio. Another thing which I would like to add, apart from the fact that Mr. Sanjeev Bajaj said that this GST cuts will lead to significant buying in festive season, and there will be good credit growth which will happen, which will benefit HDFC Bank also, and of course Bajaj Finance, Bajaj Finserv also. I would say that another thing which needs to be noted is already there is a liquidity surplus of 3 lakh crore in the banking system. Plus the CRR cut will unleash another 60,000 crore into the system, which is a durable liquidity. So as we move into the festive season, banks are flushed with funds. So any bank which has a prudent lending practice will see a good growth. And so from that perspective, I like HDFC Bank, as I said, the most, followed by ICICI, SBI, of course. For example, if you look at SBI's portfolio also, there is an express credit loan portfolio which was not growing. It is mainly lended to government officials, right? And these guys will spend money now, now that the small cars and ACs have become cheaper. These guys are going to spend. So this book, I'm sure SBI chairman will allude to this fact that after some time during this festive season, that express credit loan book of 3,30,000 crore will start growing now, and which is a slightly higher yield for them. So I would say that definitely it's a big boost to the economy. And yesterday's market reaction was not that great, but I would say that structurally, and I'm expecting even more reforms from government, one after the other, which will stimulate the Indian economy without compromising too much on fiscal side.
Tax cuts have happened, rate cuts have happened, at least the first one. We'll see if there's another one. And now there is GST cuts. And you're saying perhaps there will be more in terms of focusing and stimulating consumption especially. So Parag, stay with us. There are two more names, right? Samman Capital has got a new person on top, and we want to highlight it for a specific reason. And Aptus Value Housing is the other one. Gaurav is here with more details on both. Gaurav, take it away.
Well, yes, when we talk about Sanman Capital, two reasons to focus. First is that when we look at the news flow, Mr. Himanshu Mody has been appointed as CEO from September 4, 2025. Remember, he was a group CFO in Suzlon Group. So that is a news flow. But other than that, when we look at fundamentals, we are seeing some kind of shift. And the reason being that when we look at the AUM, remember in FY29, we saw IL&FS crisis and Sanman Capital, which was earlier known as India Bulls Housing, took a huge hit. After that, we saw AUM almost declined almost by 50%. Other than that, the legacy book after that was brought down to 37% of the overall book. Even when we look at debt to equity, that declined almost by 8.2 times to 1.9 times in FY25. From here on, we are seeing some kind of green shoots. In first quarter, we saw AUM increasing very marginally on a sequential basis, and at the same time management also indicated that by FY27 AUM is expected to grow at around 1 lakh crores, which implies more than 20% growth on a CAGR basis. Other than that, management also said that the credit cost is going to be just 1% on a steady state. So definitely two reasons why management also seem optimistic on the company. Remember, when we look at the stock performance in the last 5 years, the stock has not done well. It has, in fact, declined almost by 18%. But over the last 5 days, we have seen some rally. Around 11% is what the stock has grown. So definitely, there is a positive news flow. Management is also optimistic. So it will be really interesting to see now how it pans out for investors from here on.
Okay, all right. Thanks a lot for that, Gaurav. Well, let's go across to Parag. Parag, any view on these names? Sanman Capital, new person at the helm, and Aptus, it pointed out today as well that could possibly be the stock in the near future. However, if you look at it in the last 5 years, it's absolutely missed out this bull market. Your view on both these names?
Sorry, because I'm not holding the stocks in my portfolio, so I'll not be able to give my view. But affordable housing is a theme which I focused earlier and had various other stocks in my portfolio. But of late, I don't have any stock in the portfolio, but it's a good space to be in. Of course, in lending, as I keep saying, you have to be very, very prudent. And economy was not in a great shape in last, I would say, from election till now. And now I think economy is getting its act together with normal monsoon, with income tax slabs going higher, and as we discussed, GST cuts. So I would say that from here on, I would like to, but right now, as we speak, I am not going beyond HDFC, ICICI, SBIs of the world in the financial space.
Absolutely. In many of these cases, Parag, what seems to be happening is the market is, someone put it, and I thought it was well put, re-rating based, the thesis is going from very bad to bad. And maybe we'll wait for it to go to good. Yeah, I mean, sorry, you want to add something?
No, so I would like to say, we remain focused on large cap players mainly. In real estate, for example, we own DLF and Oberoi. So I would say that, basically the economy has to start growing rapidly and this tariff tensions has to ease a bit for us to take a slightly more risk and go into slightly lower down names. For example, you just took interview of Mr. Kamakodi, whom I have a huge respect for. And they are one of the most conservative and prudent lenders. And we always used to own City Union Bank in our portfolio. So I would like, and at a price, definitely will be a buyer in that particular name because they are one of the most prudent lenders. They remained on a below 10% growth from after COVID till last year. Then last year they saw growth and they started growing at 13-15% with decent margins. But it's a name which I would love to add on a dip. Or if I see really economic growing rapidly. But till then, I would like to hold on to the known names where we have a complete balance sheet comfort, and of course the stocks in large cap space. Generally, the stocks have not done that well because of FII selling, and that is where I see the major opportunity.
Okay, got it. All right, good to chat up yet again. Wishing you a good day ahead, Parag, and we look forward to chatting up rather soon. By the way, keep an eye out on the bottom of your screen. Prime Focus, a stock that's up, I think, 40-50% in this year itself from the last 6 months. Though in the last 1 month, the stock actually is down close to 10%. There's a large trade. I think Nimish had alerted us that was likely to take place. See, from those highs of around 167, it came down to around 140. 6-month chart tells you the stock is up 50%. We'll try to get you further details on that particular name. We take a break, come back. Pre-open rates will be with us. We'll also be joined by Hiten Mistry of Equirus Capital to focus on the FMCG sector. Stay with us.
Welcome back. This market pre-open session is kicked off, and we'll look at it in 2 or 3 minutes once things start to settle down. Srikanth is with us, as always, on Fridays, and Mitesh is with us as well to run us through trading ideas and how's the setup looking. Gentlemen, coming to you a little late today. Mitesh, let me start with you. How things set up? I mean, cooled off from the highs, back in the ranges. So expect, a steadier kind of day without too much excitement. What's your sense?
Morning, Prashant. In fact, the idea that the markets will be contracting and in range, I think, has been there for the last few days, and I think I still maintain that view. What is important is that the weekly indicators which depict volatility are also turning flat, which means that there could be another 2-3 weeks before we actually have a very decisive kind of a movement on in either direction. But for the time, it looks like 24,400, 350 broadly on the downside, and 25,000 to about 25,150 on the upside would be the immediate range.
Got that, and you're absolutely right. I mean, that idea broadly, the thinking has been that, and it's been it's kind of played out that way. Srikanth, what about you? Indices at a headline level, what's the call?
Good morning, Prashant. Good morning, everyone. For indices, it is very clearly visible that the market is stuck between the broader range of 1,000 points. It is not crossing 25,200. It is not breaking 24,300. So till the market is not crossing this range, I think we are going to see range bound sort of activity. And maybe that's the reason FIs are heavily short on the market. They are not at all thinking about whether the market will cross its 25,200 or not. While looking at the entire setup, in the near term, we can see some activity towards 25,000 sort of levels, because at 24,600, 700, the market is having good amount of support. And since the last 2 days, we are seeing some buying activity in Bank Nifty. And today, on the back of fall in the bond yield, we may see some activity in technology companies. So maybe banks, IT, both this help the market to move higher towards 25,000 sort of levels.
Yeah. Got it. Mitesh, stocks, what are the trades?
Yeah. On the stock side today, I have a mix of buys and sells. On the buying side is IDFC First Bank around 72, tried to buy with a stop below 70 rupees 90 paisa. Look for a short-term target of 75. Similarly, on a mild pullback, tried to buy National Aluminium. The stock has had a very good breakout, and yesterday was the first sign of some kind of a pullback. So if you get around 204, 204 half, buy here with a stop at 199 for targets of 215. Two sell calls. Delivery, after a big rally, is showing first signs of profit booking, so can give a pullback. Sell here with a stop at 478 half for targets of 455. And SBI Life is a sell with a stop at 1811 for targets of 1750.
Shrikant, what about you?
See, based on the news flow, we feel we may see some activity in technology companies. In that, we like Coforge, Tech Mahindra, Infosys. But for the day specifically, we should look for adding Infosys at current levels with a very short-term view. We can keep a stop loss around 1445 for the same. And we can expect again 1490, 1500 sort of levels on the higher side. So we like Infosys at current levels. Also, we need to focus on Bajaj Finance. There also the stock is showing a lot of strength. Yesterday also there was news flow, and after that the stock has managed to sustain its gains. So based on its current formation around 910, we should look for keeping stop loss. But at the higher side, we can again expect the levels of 1000, 1020. So Bajaj Finance as well as Infosys should be on the watch list.
Okay, all right, gentlemen. Thanks very much for your trading advice. We'll come back to you a little closer to market opening. For the time being, we're going back to the big story. GST regime kicks in with all the changes, and now we have two key slabs, 5% and 18%, providing relief to several sectors, including, of course, electronics, consumer electronics, and FMCG. We have Hiten Mistry, Vice President and Sector Lead Consumer at Aquarius Capital, joining in with some thoughts and perspective. Hiten, good to have you on. You know, I was just taking a look at stock price movements. So if you're looking at major consumer durable players, like a Voltas, a Blue Star, or even if you're looking at some other, consumer stocks like a Trent, V-Mart, the gains are between 5 to 10% already in the last 1 month in the anticipation. The question is, what are you most convinced about now from here on, where this GST benefit will lead to a more durable rally, a durable appreciation in stock prices and earnings?
So, morning, Surabhi. My senses would be, I would like to talk about the sectors more, where, like we can see the significant potential in the sectors where GST becomes 0% and has a massive room to grow in terms of the market size. So likewise, I would like to give an example of insurance. As we all know that we are the lowest health insurance penetration globally, only 37% population covered, and GST becomes zero here. Healthcare again become a 0%, massive room to grow. Stationery, as a father of two school-going kids, I know what we are spending in the stationery. This three category becomes 0% now in a massive room. Second would be about as you mentioned, about the consumer durables, household appliances, consumer durables, vehicles, construction materials, which were coming under 28%, now became straight down to 18%. Third piece would be about the large chunk of the FMCG, which will cover the household items, food and beverages, which were covering approximately on 18%. They came down straightly to 5%. In fact, services also, like salons, fitness, yoga, those were coming on 18%. So straight away came down to 5%. So certainly, consumer durable, as you mentioned, will be contributing a lot in terms of the entire growth of FMCG.
You know, when you, Hiten, morning, when you said as a father of two school-going children, I looked up. I think I can... There's stationery, but there's also all the iPads and the, that pad and this. It's a lot of electronic stuff as well, right?
Yeah.
So DOMS, Hiten, is the one? Which kind of is sort of a play on that?
So, see, again, I would say entire stationery segment will become zero. So, while I would stay a little averse to say about particular stock, but with respect to category, I am very, very bullish on the entire stationery segment also.
So, what do you have coverage on there, Hiten? Stationery segment?
Stationery segment, okay, if I talk about the product wise, then entire stationery product like pencil, notebooks.
No, I'm saying which are the stocks you have coverage on in that segment?
Okay, so I am from the investment banking team, Prashant. So,
Okay.
I generally cover the sectors. Our research teams covers these stocks a lot. So as I mentioned that I would like to speak about the sector a lot, where I am very, very bullish on the insurance. I am very bullish on the consumer durables. And thirdly, I am very bullish on the services segment, where salons, barber, fitness, which were fetching like 18% GST, which came down to 5% now.
So, sorry, which one? Which last one was what?
Okay, so yeah, so in the FMCG space, there is a subcategory of services: health clubs, salons, barber, fitness, and yoga centers. All were coming at 18% GST. Now they came down straight down to 5%.
Okay, okay. And we from a listed universe for our viewers, there are companies here. I'm not asking you for companies, but
Very, very few companies, but there are high chances to grow for the companies also to come in the IPO category now.
I see.
Yeah.
Yeah. So insurance and consumer durables, which places exactly?
Yeah. So in consumer durables, as we see that household appliances, which are very large in average order value too, right? Like air conditioners, dishwashers, etc., fridges. Those average order values like 35,000, 40,000 per product, right? Which came down from 28% to 18%. I would certainly consider the vehicles also in a consumer space, where auto components were also at 28%. We can see fuel, which was coming under 28%, which came down to 18% now.
Okay, all right, Hiten, we'll leave it on that note. Thank you very much for joining in with your thoughts and perspective. Thanks very much. So we've come to about 9:10. Let's take a look at some of the movers and shakers, and we should get Sudarshan back up quickly because insurance is the sector to watch. The companies themselves have said this, brokers have said this, that the hit because of the fact that there is no input tax credit available for insurers is between 0.5% to about 1% of embedded value in most cases. So the analyst estimates and what the companies have said, it's largely matching. And the other sort of argument is that in the longer term sense, this is really positive. If GST goes down, generally it's good too, good for boosting demand even for insurance. So you can see the reaction. A lot of these stocks had fallen yesterday afternoon, but they seem to be in recovery mode this morning. Speaking of other stocks, just very quickly from actually even Niva Bupa, everything is up on insurance. There is some buying on, Voltas, Swiggy. These are some of the other names. Let's look at Sri Digvijay Cement as well. That's a stock in focus. Nigel's been telling us about that big, gigantic promoter stake sale that's happening, up 1% at this point in time. Saman Capital, we should pull that up as well. Management change and some of the markets fairly optimistic on coming back in. But remember, Saman had rallied when our colleagues had put out this news earlier a couple of weeks back. It still got about a 2% up on it, and Aptus value is also 1.5% higher. So that's how it's playing out. Overall, the Nifty in the pre-open session has now settled with an 84-point gain, 24,818. Good time to go back to our technical experts for their key call. Mitesh, 9:10, what's the one stock you'll pick?
So one thing, before that, SBI Life for the short call, I think that will not work out because it's opening with a gap up. But on the call for the day, I think Nalco, if you get it around 204 half or those levels during the day, that will be a good buy with a stop at 199 for targets of 215.
Okay. All right. Thanks for that. And we take that point on board as well, that you're changing that short call on SBI Life, which actually gets us back to the insurers. All of them in the pre-open are up between 1 to 2%. So it's back with us. And Sudarshan, you explained it really well, right? That now I think the hit is not that big. So let's revisit the numbers again.
So insurance stocks are indicating a start in the green. All the names are higher in pre-opening session. So remember, GST Council has approved an exemption for the premium that everyone pays on their life insurance. Now, after that, there was a concern that it will impact on embedded value of these insurers. So now all these companies have disclosed to exchange. HDFC Life says that impact on EV will be less than 0.5%, but it maintains that it will double its VNB over next 4 to 5 years. SBI Life says the impact would be less than 0.2%, and ICICI Prudential says the impact would be less than 1%. And just now, Axis Max Life also has come out with its disclosure, and it says impact also would be less than 1%. That's the reason you are seeing a big recovery from yesterday's fall that we had seen in all these names.
All right. Thank you very much for that. That is the insurance names which are going to be in a focus on the back of at least two companies for now. And by the way, we'll try and speak with HDFC Life, in particular the largest company, the largest private life insurer, to understand some more explanation about how they see the impact playing out. 1.25% higher. Yesterday, of course, from the highs, they all came off. Even a name like PB Fintech, by the way, ended pretty much, sold off, I think 6%, 6.5% from the day's high to close absolutely flat, or maybe even slightly in the red. 0.6 higher this morning on PB Fintech. I think we could just a couple of seconds away from the market open. So we will look at rates, and then we'll sort of get down to business with regards to individual stocks, etc. So what do we have in terms of first rates, which will kick off in a bit from now? I think in terms of news flow, there isn't very much, at least nothing big. There are a bunch of these brokerage calls, but those are important to keep an eye out on as well. So 85 points on the Nifty. The sensex is up 295 points. And we've got the first rates on your screen now. 24,800, 54,170, 54,200, just about finding its feet. The small cap index is yet to open. That is yesterday's change, which you see on your screen. But that'll start to, it's opened up about 1/3% now, the small cap index, the mid cap index. So it's all across the board, 1/4% higher on the indices. Let's look at the Nifty heat map. I think gives you a quick sense of where we are on the Nifty 50 stocks, up and down, mostly all higher this morning. So Mahindra, once again, for the second day running on the Nifty, of course, the top gainer, ITCs on the other end. Surabhi.
Okay, let's take a look at the individual movers and shakers then. I'll start with the insurers. It's all about insurance. HDFC Life, ICICI Pru, Niva Bupa, all of these stocks are up and about, as many of the life insurance companies have given out the extent of the impact. Aside of that, Mahindra is in pole position once again after a 6% move yesterday. M&M is managing another 2% today, so looking good. There's Trent with a 1% gain, Bajaj Auto, Eicher, Asian Paints, SBI Life, HDFC Life, like I've been saying. So it seems the residual GST impact, it continues to play out. This is what it is. Beyond all the GST consumer insurance sort of names, you've got something like a Power Grid that stands out. Reliance is actually up 0.5%. Though, as our earlier guest explained, that of course even Reliance is a huge retail business, so the GST cuts are going to help it in a big way as well. On the flip side, ITC Nestle seeing some profit taking. Apollo Hospitals, which is up 2%, also slightly lower, but not much beyond that. The rest of the Nifty is quite okay, and 24,800 is on the board. Nigel.
Well, a few stocks that are moving around actually. Prime Focus, the 1.5% large trade took place. That stock is probably one of the stocks in the broader markets that's flying away up close to around 8%. Jai Bharat Maruti, that's another stock that's doing very, very well. That's up close to around 5%. So big up move is what we're seeing on that name. BGR Energy, something's going on there. Financials don't justify this sort of a move. But in the last 3 months, the stock has actually doubled. So that's another one, in fact, that's moving up. I think it's up close to 4.5%. It was $100 odd just 3 months ago. Sterlite Technologies, that one as well is up close to around 4% as we speak. And moving on large volumes, a good up move is what we're seeing on that particular name. One Mobiwick stock that we had highlighted at around 240 rupees, that the supply overhang is out of the way. The stock had pulled back a little bit. Now it's moving higher on large volumes. RBL Bank, is trending higher. That one keeps going into the F&O band. So that's another name that we're looking at. And Aptus, yesterday there was a virtual clean out trade. Stock has been an underperformer for the last 5 years. Now the street is getting a little bit optimistic because the names that came in that large trade are, quite solid names. So the street is optimistic that they can deliver the numbers that they've spoken about in terms of growth, in terms of operational efficiency. For the time being, that one's holding with a gain of around 1.5%. And Electronic Smart, that's a company that we'll get later on in the day here on CNBC-TV18. That's up close to 3.5%. So pretty okay start, guys.
Absolutely. And, it's looking good overall. And 70 points still holding, about 24,800. Yesterday, of course, from the top, the market sold off about 200 plus points. So kind of sort of recovering some of it. Clawing back some of it, at least in the first 10 minutes or so of trade. Insurers are at the bottom of the screen, and we'll have other sharp movers as well out there. Trideep Bhattacharya is with us, CIO, Equities, Edelweiss AMC. Trideep, great to have you with us here. Appreciate your time. Do you believe, Trideep, with the three things which have happened so far, the tax cuts, the interest rate cut, and of course the GST cut now, ingredients are in place for a bit of a revival? Markets, of course, they can be lead lag, but do you think it's a much better setup, supportive setup for consumption to take off? What's your sense?
Absolutely. If you put the math behind it, then the total impact of tariffs arithmetically is roughly about 0.5 to 0.6% of GDP. And if you look at the consumption stimulus that we got yesterday in the form of GST cut, tantamounts to broadly the similar sort of a number. So dollar for dollar, I think it has been matched to the extent that the demand deficit or the impact that could come through on the back of tariffs is actually negated by the consumption stimulus. The thing to keep in mind is these two, of course, affect different stages or different parts of the economy, and those impacts will be there. But if you combine this consumption stimulus along with rate cuts and a possible rate cut going forward, lowering inflation, I think the ducks are lining up for a consumption recovery post-festive season in a meaningful way. Last time when we saw such a cut in that was in GST cut back in 2017, we saw a meaningful price elasticity of demand, meaningful pickup in volumes, particularly in areas like autos and FMCG. I think it'll probably kind of happen to a similar extent over the next 2 or 3 months, and that's hopefully ends the earnings downgrade cycle that India has been for the last 12 months, and that should mean better days for markets over time.
I just want to make and point taken, Trideep. Look, pull up MOSCHIP, MOSCHIP. A MOSCHIP is and the reason I'm mentioning it never comes up, but it's the biggest volume-led gainer on the NSE. It's up 7%. There you go. And this week it's up 40%. Exceptional volumes. I think this is the highest weekly volumes ever on this company. It's a Hyderabad-based company. It's got chip at the end of it. And by the way, it is in semiconductor design and sort of system design and in that area, and maybe Hormuz can dig in a little deeper in terms of why this one is getting so excited. There is, of course, the backdrop that Semicon Week, which happened, a 3-day event in Delhi, but I'm not sure if this has got something to do with it. Prime Focus, I think we mentioned, it's limit up now. It's up 10%, Prime Focus, so 158 rupees on that one. And MobiKwik is another one which is starting to come up a little bit, 1.5% higher. SKF India is up about 5.25%. So just want to highlight that as well. And Quality Power is up 5%, 906, 907 as we begin the session right now. Niva Bupa is up 3%. And so, more and more stuff coming into the front as we go through the motions. Just first, still about first 5, 6, 7 minutes of market open. Surbhi.
Okay, that's how it's playing out. Trideep, hi, great to have you on. So obviously consumer stocks have been benefiting from this run. But, I was taking a look at the fine print, and actually even for industrial goods, for a lot of defense equipment, there are substantial rate changes and things like, small things, walkie-talkies, or even big things, components that go into drone manufacturing, etc. There are cuts across the value chain for industrials and for defense. So just tell us in terms of across the board, how's positioning now on sectors? Where are you on industrials? Where are you on consumer? And if you will be tweaking or changing anything in a more meaningful way, in a more structural way because of the GST reform?
Sure. So I think overall, I'll start with consumption to answer in the true honest. So if you sort of divide consumption into three segments, one is luxury, second is mass, and third being rural. We have been overweight in luxury consumption as well as rural consumption for a good while now, in the last 3-6 months. The part of consumption that we were underweight were mass consumption. I think that's where we have added leading on to this GST announcements. And I think we're going to stay put in that direction. And if there are any weaknesses that might come through, we'll kind of add to that. So if you put that in context, then various aspects of consumption, large ticket and small ticket, we are clearly overweight. With regards to other sectors, the other areas that we are betting on were specifically on government capex. Now, while earlier in Modi 2.0, if I may call it that way, it was fairly widespread with regards to government capex and hence industrials. This time around in Modi 3.0, it will be a lot more specific. Areas like defense, railways, and power are the three such segments where I think the spending with regards to government is likely to be focused, and that's where our portfolios are oriented towards at this point in time. The third area that we like are the rate cut beneficiaries, which could be kind of NBFCs in the context of financials at reasonable valuations have come off of late. We need to calibrate a couple of impacted industries like textiles, etc., and the impact on the same, and also the floods that have come about recently. But net still, they offer decent valuations along with growth prospects going forward. So that's the third area that we have that we are overweight. And what's funding these overweights are broadly commodity-related sectors, whether it's oil and gas or metals and mining. Tactically, they could be in and out, but broadly speaking, we remain underweight in those space. So that's been the positioning as we speak. Of late, we have added to mass consumption, and in the weakness to a certain extent in financials is what I would say we've added on to.
Okay, all right. Hi, Tradeep. Good to see you, Vin. What about autos? Maybe in the near term, we'll have some kind of uncertainty and some pause of buying, but otherwise we could be bracing for very good times with the vehicles getting a little cheaper. What's your approach to the auto segment? Autos, auto ancillaries?
We've been overweight. That's part of consumption. When I say consumption, maybe I should have specified it a bit clearly. But we've been overweight auto OEMs, to be precise, particularly in two-wheelers. And of late, given that the four-wheelers are coming off a lower base after having underperformed for a good while, we've added to four-wheelers as well. But autos is an important part of consumption and would be overweight in our portfolios as we speak. And we've increased weightage over the last 3 to 4 months as well. Global focused auto ancillaries is something that we have taken a dim view of. We are underweight in that segment. We probably continue to remain that way. But domestic focused ancillaries and OEMs is something that we are focused on at the moment in the context of autos.
Okay, got that point. Pradeep, the wider question, do you think from an earnings perspective, anyway, US tariffs were not going to have a very direct impact on earnings because it was more focused on specific areas like textiles, etc. But for what it's worth, I mean, to what extent does the GST cut offset the impact, first order or second order impact, that the tariffs would have had on growth and earnings?
So two aspects to that. One, dollar for dollar, it does. So if you look at the total impact of the tariffs so far, including the 25% tariff that have come through, is roughly about 0.5 to 0.6% of the GDP directly. And if you add up the consumer stimulus itself that came about in the form of GST cuts, that itself tantamount, they are equal in amount, without adding on to the tax benefits that were given early in the year, and also the loosening of the purse driven by lower interest rates. So net, we have value for value, we have sort of masked the impact, whatever it was meant to be in the context of tariffs. However, the areas that will kind of get impacted, which include textiles, gems and jewelry, and seafood, are specific industry-specific impact, whereas this is more broad-based. So The areas of impact could be a little different, and that's what we as an economy will have to contend with. But dollar per dollar, so far, in terms of direct impact, it's been massed through. And I think in that context, one must compliment the government that they have done whatever they could do in the form of giving the boost to consumption, and that hopefully in a second order impact, maybe sometime next year, could kickstart the private capex cycle, which has been missing in a good for a good while.
So, to translate that into earnings growth, and usually this is a question that we ask the sell side fellows, the stockbrokers, but let me ask you. I mean, the street was hopeful for 12-13% kind of growth. Then Q1 was patchy. So then we said, okay, maybe cut it down by 1%. But as things stand, how much earnings growth are you expecting this year for at least the stocks that you own, or for, it could be any wide index, BSE 500, anything that you choose to benchmark by?
Sure. So the background has been that in FY25, we started forecasting about 13% growth. We ended up being a low single digits. So we are sitting on a good amount of earnings cut so far. So with that lower base, I would expect the Q2 also to be lackluster because that will kind of go a bit like lost in transition. Q3 onwards, we will see a pickup in growth rates meaningfully come through with regards to India earnings forecast. And given that in mind, somewhere between 10 to 13% is what I think my expectation could be. I think the last round of cut might happen along with Q2 earnings. But if the outlook for from the corporates that we hear in the Q2 earnings season, which is the upcoming season, turns out to be positive, the stock prices might have a different story to say. Given that the last 8 days for the month and then onwards, we could see a pickup in demand driven by GST cuts and whatnot. So fairly critical earnings season coming up, I would say. But remain hopeful that this will be that makeover quarter, or the transition quarter from earnings downgrades to upgrades overall for the back half of the year.
All right, Trideep, we'll leave it there. Good conversation as always. Thank you very much for coming on. Appreciate it. Have a good weekend and speak to you soon again. 1,500 stocks are higher. You got about 900 stocks which are lower, and the Nifty's now got about 50 points on it. Lots of new stocks in the mix from the last time that we checked. Ixigo is a new one. Ixigo is up about 4%. And there is Vimta Labs, which was not there 10-15 minutes back when markets opened. Vimta is up about 4% as well. Jaycorp had a very large move yesterday. It's up another 3-4%. Second largest volume-led gainer coming through right now. And there is Sterlite Tech, which I think got a bit of a knock recently. 5% higher on Sterlite Tech coming through as well. So things are picking up from a stock-specific basis. Some more stocks in terms of what the street calls are looking like, with Sudarshan, who's back with us, Eureka and Voltas. So take it away.
So MK has initiated coverage on Eureka Forbes, and target price it has given is of 725, implying an upside of more than 20% from current levels. It believes that over next 4 to 5 years, there is a potential of stock to double from here. And it says under new management, companies transforming services and unlocking growth. And it has recorded 7 straight quarters of double-digit growth, and service momentum is reviving. With in Q1, company has recorded double-digit AMC bookings. And despite rising R&D cost and marketing expenditure, margin has risen more than 400 basis points in last 2 years. And on the back of these factors, it expects revenue, EBITDA, EPS CAGR of 13%, 20% and 24% respectively over FY25-28. UBS has a buy call on Voltas, and target has given is of 1,770. It says lower GST on room ACs raises affordability and also demand hit by unseasonal rains. But there is a festive season ahead which may improve the demand, and channel remains upbeat on festive season, and it has raised revenue and earnings by 2% for FY26 to 28.
All right, so very, very interesting. Voltas and Eureka there coming in as far as brokerage links are concerned. Well, let's just get to a Network 18 exclusive. Commerce Minister Piyush Goyal says GST reforms are transformational for the economy, and the industry has committed to pass GST cuts to consumers. Listen in.
And industry has committed to us that they will make sure that the full benefit is net of input taxes is passed on to the consumers. So consumers are in for significant gain, And I'm very, very confident. Access lower prices will give buoyancy to demand, and higher demand leads to higher taxes, and ultimately higher demand also promotes more investment because the demand leads to more manufacturing in India. So it's a virtuous cycle of growth, and the multiplier impact is what will give India a big boost. We're currently collecting nearly 2 lakh crores every month. And with this boost in demand, the revenue will probably go up rather than being a revenue. Fortunately, the timing of the GST reduction at such massive levels couldn't have been better. This will give a big impetus to domestic demand, which will help some of the exporters who may lose a part of their business. I'm very confident that this and the impact of this starting on the first day of Navratri on 22nd September will give a big leg up to the economy, to GDP growth, will ensure that Indian investments continue to power on, will attract more people to set up base, because ultimately when there's demand, there will be interest in investment to meet that demand.
Okay, so the implications of some of the major reforms that have been announced, including, of course, GST. For the time being, just looking back at the market, it's holding that 24,800 mark at least as of now. Let's look at some other stocks in focus. Varun Beverages, by the way, is still falling. So it was the one stock from the entire FMCG universe that was weak yesterday. And we know why. Carbonated beverages, on that, the tax goes higher. So it's about a 1.5% reduction now. A lot of the other FMCG stocks are cooling off. Colgate, Nestle, Marico, Britannia, Dabur, everything's down between 0.5% to about 2.5%. So that's on the lower side. RBL Bank has made a good move in the last, I think, 10-15 minutes since opening.
Yeah, and that's in the FNO band.
Okay. 3.5%. Suddenly it's, rising higher.
Just one more word on RBL Bank. 2 sessions ago, we had mentioned that it had reached, normally a stock goes into the FNO band when it goes above 95% of its market-wide position limit. And it had gone on that day to around 100%. Now, from there, it's gone deeper, into the FNO band. So the street clearly is sensing something. And that's why you cannot take a fresh position, in the futures market. But that's the one on the radar, because actually the Nifty Bank has been underperforming in the last 1 month or so. But this one actually has done a relative outperformance. So I'll keep a close eye on it. We saw it periodically go into the FNO band even in August, but there was no news that came about. Now, September, again, in the first two or three sessions itself, it went into the FNO band. So that's one name that we'll keep on the radar. It's gone into the FNO band. So,
Yet it's, still building and rising on those gains. So let's watch out for this. Also, Lee Travenues Tech, 4% higher. Remember, just around earlier this week, I think this was not yesterday, but day before, a lot of the travel tech stocks like RateGain and even Lee Travenues, Ixigo, they were doing very, very well. And Lee Travenues is building on that 4%. It's been a good week for this one. RateGain, not so much today. Ixigo is up about 10% this week. What else? Edelweiss Financial has suddenly moved higher. 4.5% on Edelweiss Financial, Sterlite Technology. So there's plenty moving in the mid-cap market this morning. Let's do one thing. We'll take a quick break, come back on the other side. We'll put the spotlight on a couple of the stocks and get a couple of management conversations going as well.
Welcome back. This is Corporate Radar. Well, Lalit Agarwal, the founder and MD of V-Mart Retail, joins us on the show. V-Mart Retail, well, the impact of the GST rate cut incremental sales due to the lower rates, festive demand, outlook, all of that is what we're going to discuss. Hi, Mr. Agarwal, good morning and good to see you in. Well, let's get to the first question. What proportion of your sales value and volume come in below that 2,500 rupee mark? If you could help us out with that.
We are a value retailer and largely catering to tier 2, tier 3 towns. So our customers don't have that kind of money to buy things which are about 2,500. So almost zero.
Yeah. So it's a widespread portfolio-wide impact, sir?
No, I mean, so for us, almost 85% of products that we used to sell was below 1,000. So it was already in 5% GST criteria. So now only 15% of those product lines which we were sold, which was being sold above $1,000 are getting impacted. And that is a good news for all of those consumers. And it is also a good news for us because we don't have to segregate these pieces and while pricing, we need to keep those in mind and have multiple GST framework. But it is definitely a very good invited and very good perspective. And beyond this, I also see it as a good perspective where there are a lot of integration. There's a lot of consolidation of product lines and GST which has happened, which is in terms of the man-made fiber and the yarns, the entire value chain, which was earlier at 18%, where an inverted duty structure also was getting erupted. So overall, we believe that the apparel cost to the consumer will go down and will go down beyond what the GST rate has gone down.
Yeah, so 85% under 1,000 rupees, 15% above 1,000, but of course everything under 2,500. That's the breakup. So this 15% perhaps gets a bit of a booster for now.
Yeah. So
any way to put any numbers to it? What kind of volume impact?
So 15% also used to contribute 25% in value sales. So it was not just 15% is the quantity, but the value which used to come down from there was almost 20-25%. So now that should definitely go up because they will get a little more cheaper. And it's just not apparel, but then also footwear, where entire footwear has brought down from 12 to 5. And it is also a lot of FMCG products, where a lot of those. So I believe there should be a delta growth in these festive times, and then there may be a lull in these 15 days till the time of the launch, and then by till 22nd, because people will wait and want to have the new GST regime and then purchase in that new GST regime. But yes, we believe there should be a delta 5 to 7% delta growth than what we were expecting from these consumers which were buying above that particular limit.
That's okay. You answered partially my first question, Mr. Agarwal. I was exactly trying to come to that. So how much more is the GST-related flip? So you said 5 to 7%, which means if you talk overall festive season sales, so let's talk third quarter, because I mean this last few days of September will settle here. So either you can tell us third quarter number or this festive over last festive. What is the total growth that you would expect now in terms of, let's say maybe revenue, or you can say volume or value, whichever way you want to,
No, so I think we are definitely eyeing ourselves, and then the way we are trying to open up new stores, as well as the way we are driving our capability internally, so as to get a little better like-for-like store. So we believe we should be on an overall company level growth perspective, we should be touching around 20% growth, and we should be driving that kind of growth, overall growth year on year, and that is a little more ask from the team, and that is what we believe we should be able to do, and that is what we are gung-ho and we are planning for.
20% growth for FY26.
20% growth in this festival period.
In the festive period, okay.
Festival, yeah.
Okay, all right. So festive to festive, 20% growth thanks to the added GST flip that's happened. Now, sir, I want to get back to the point on pricing. And what you said is 85% of your products anyway were under 1,000. But now that the 1,000 cap goes away, it's been moved much higher. Won't you look at undertaking some sort of maybe price changes as well, maybe slight up-trading with your customers? You don't have to keep products at, say, 999 now. So should we expect any, gradual, not immediately, but gradual, upward pricing tilt?
No, I don't think, because see, value market and value fashion is also becoming very competitive, and there are a lot of other players which are also coming into this market, and then I think we are able to deliver better value. So a 999 or these 999s are psychologically also some 3-digit numbers and 4-digit numbers also drive a lot of consumer going into this particular basket or driving into that basket. So I think there is always a pricing policy that we follow. The GST rates definitely in those times wanted us to put some lower margin if we want to keep it at 999. But yeah, that may go up, but it is very marginal, very, very small. I don't think that will impact. But yes, we definitely want to bring in more consumer who can consume or who can actually use better product, which are better designed product. Because as we are seeing more Gen Zs and we are seeing more fashion coming in, so we definitely believe that better acceptability of better fashion and better product is something that we want to drive, and that will come, and price shouldn't be a barrier. But yes, largely our consumers are those consumers who do not have that kind of money to spend. So we also want to keep an eye on their pocket, and their pocket doesn't go up because their incomes are not going up too much, and that is what is very important, and that is what is the major criteria for us to take up the ASP or the price of the product. So if the country does well, if the economy does well, if their income grows and the per capita income grows, then the higher price or elevating the prices could come in. But we are not expecting any profitable jump on from these lines on gross margins.
All right. Mr. Agarwal, the next big cue is going to be the Bihar election, right? And from a market perspective, the street is divided. Whether or not we'll see a breakthrough with the United States before the Bihar election, or maybe some believe that maybe, Mr. Modi will not want to make that call to Trump ahead of that state election. So we'll have to see how that goes. But from your perspective, that's a large market for you. Ahead of the elections, traditionally, what have you seen? A bit of a boost, consumption goes up, there'll be a lot of movement?
So ahead of the election, normally it is not a great news. Normally there are disturbances and local disturbances which comes in. But yes, once the elections are over, we have always seen some bit of growth coming in, and that is what we are expecting again. That in every election brings in some money in the economy, brings in some movement and some mobility. That definitely drives a lot of business, and the sales generally goes up after the election. So we are expecting some bit of disturbances during the election period. But yes, the expectation of having a better business after the election is definitely there.
Okay, all right, Lalit, we'll leave it there. Thank you very much for joining us, and we wish you all the best of luck for this festive season and beyond. And we'll talk again soon. Thank you very much. That's V-Mart with some pointers with regards to what this GST cut can do for their portfolio. 25% of the value. I mean, that perhaps gets a bit of a bump. 20% growth in this festive season overall is the guidance coming through from V-Mart. Just one name which has climbed to be the top gainer, volume-led gainer on the NSE right now is BSE. It was not there in the morning, but BSE has now seen a sharp spike. It's up about 3% or so. And Sud was telling us yesterday, and maybe if he wants to come back in, that yesterday, this week saw the first time these new expiries happened. Tuesday for NSE and Thursday for BSE, and volumes turnover on the option side was still extremely high, close to earlier highs. So I'm not sure if this is the reason. But we'll have more as we kind of go along. But it is now on NSE the biggest volume-led gainer coming through. RBL Bank is up 3.5%. Some other names, NetWeb, we've been highlighting all week. NetWeb is up 25% this week so far. What a move it's had. It's up another 3.6%. This is the third day in a row, by the way, NetWeb. And of course, the other one is E2E, which has also done extremely well. Last few odd trading sessions.
Just one more stock, MobiKwik. I remember, I think on Tuesday morning, post that large trade, we had highlighted in our morning chart that sometimes these stocks, which are big underperformers, they wait for a large trade to go out of the way. And I think Abu Dhabi investment got out of the way. Yeah. And post that in this week itself, from around 240 to 45 when that large trade took place, the stock is now at around 300 rupees. Keep in mind, if you pull up a longer, price chart, you'll see that the stock is still half from the peak. but a good bounce back is what I say. This is probably the stock of the week.
Absolutely. I mean, 30% plus. Even a lot of the GST stocks haven't moved as much as this one has. MobiKwik having quite a quick move in the last 7 sessions. But for the time being, we are putting the spotlight again on GST and how that impacts various companies. You just heard from an apparel retailer, a value retailer. Let's talk about footwear now. GST on footwear, which is priced up till 2,005 rupees, has now been lowered from the earlier levels to just 5%. So how much of a boost could this be for Bata? Gunjan Shah, MD and CEO of Bata India, is with us. Mr. Shah, thanks very much for joining in. So we want to sort of understand a couple of things, 3 key points. First, we want to understand the impact of the GST rate cuts. Then, of course, we want to understand, what happens to incremental sales due to lower rates and the overall festive season demand outlook. So if I could start with the first, if you could break down currently your product portfolio, how much is below 2,500 and how much is above 2,500? So to that extent, what sort of a benefit do you envisage at this 5% rate now?
Great. Lovely to be here. Good morning to the viewers. Answering your question directly, basically it should be roughly around, I think we are still working out the details, but about 80% of the portfolio is below 2,500. So that should see the benefit passing on to consumers, and we are obviously committed, as has been spoken by me in the past also, to pass on the benefits to the consumers. We do expect this to have a significant impact on the momentum, which had obviously got negatively impacted when it had moved from 5 to 12. So I think this reduction is very, very welcome. And obviously, thank you to the government, Prime Minister and the Finance Minister on taking this bold decision.
So Gunjan, help us map that in terms of sales growth. So let's say like to like, if you talk about like to like, what were you expecting this festive season? And now with this bonanza coming in from the 22nd, what is your new estimate for festive season sales?
Yeah. We are still working out the details, but what we are looking for is definitely a significant boost driven by volumes, right? So we have been working over the last, I think, about 4 to 6 months on driving affordability and therefore volume-backed growth. We have already taken a lot of, pricing decisions on that front over the last few months. We have, in fact, last week launched a campaign which is already preempting this entire piece on GST, which is live right now across all the 2,000 store network. So we are looking for, obviously, a significant delta driven by volumes. We will have to see how this pans out over a period of time, but I think the festive season and this is timed perfectly well for a significant jump ahead.
So what, 15% growth, less than that, more than that? Like for like?
Yeah, I wouldn't want to comment on specific numbers to you, but as I said, I think a large part of the portfolio does get positively impacted, and as we are in the process of making sure that we pass it on, we should see a significant boost on it. That's the expectation.
All right. Hi, Gunjan. Good to see you, Ben. Well, is September 22nd enough time for you to go ahead and adjust stocks at the new rate? Because that could be a problem in the interim, right?
It can be. So we are working overnight on this. Already there is, as I said, we had preempted some of this. So we already launched a campaign. It's across all our stores even now as we speak. So I think I'm pretty confident the team is working on the back end to make sure that this gets done, both from a consumer facing perspective as well as from a technical perspective as well as taxation. So I'm pretty confident we should get this implemented.
Gunjan, hi. Below, can you break this up? Below 1,000 and 1,000 to 2,500?
It's basically, as I said, below 2,500 is roughly around 80% of the portfolio, right? I'll hazard a guess, but it should be about 50-50. So 40% below 1,000, 40% between the two.
Okay. The reason I asked that is because, our margins on cheaper under 1,000 and, 1,000 up to 2,500 also different in that sense?
Not materially different. There are, depending on the category, etc., right? Because, but not very material difference. There is obviously about 2,500 is a slightly higher delta on margins for sure.
Okay. Where do you see this? Okay, so you're saying, and you're not putting numbers to it right now, right? I mean, how many, what is the volume impact? But I'm assuming it'll show up more in the under 1,000 priced products.
Even more so, because just to give you a perspective, that is what went through a significant jump on taxation about 2.5, 3 years back, right? That's when moved from 5 to 12, and that did take a toll on it. So below 1,000 was more than 50% of our portfolio. That has dropped to less than 40, as I just mentioned. So we are expecting obviously a lot of bounce back happening on that direction also.
Unorganized to organized, I mean, that is a shift which should also accelerate because of this?
Obviously, that should be a natural conclusion of this, right? We will be able to offer, better experience, better quality products, etc., to the same segment with more affordability. And as I mentioned, we have already, initiated a lot of those corrections already over the last few months in reaction to the consumer stress. And I think this GST welcome is a very welcome announcement. I think will only aid this going forward.
Off the cuff, do you have any numbers with regard to how much is the unorganized market for the industry on the whole?
There are several estimates on this, but roughly around 60 to 70% of the market is unorganized.
Oh, so then it provides a big opportunity, this rationalization of GST. What about store expansion? If you could tell us, what's the plan out there, even the e-commerce plan? How do you see both these two going ahead if you have some goals, some targets?
Actually, just to give you a little perspective, e-commerce as well as a large part of our store expansion has been a large part of driving growths in the last few years, right? On store expansion, first and foremost, I think a large part of the focus has been driving, expansion into tier 3 to tier 5 towns, right? That's where you see a lot of urbanization and therefore a desire for a much better retail experience. The franchise model of us is now almost about 650 odd stores, right? And we are expecting there's no reason why we should not be pushing for 1,000 stores over the next, let's say, about 2 to 3 years. So there is a lot of action that's happening on that front. On e-commerce, I think it's been a fastest growing business channel for now multiple years. It's now more than double digit in terms of contribution. So we expect that to continue. There is no reason why we should have any difference in terms of momentum on that channel.
Okay, all right, Gunjan, we'll leave it there. Thank you very much for joining us. Really appreciate your time here on CNBC-TV18. That's Bata with perspective on their business. So significant impact, not quantifying the actual numbers. Of course, I mean, these things, of course, will evolve. And, of course, cut time perfectly as the festive season. I mean, it's the Shraddh period gets over and you get into the festive season. So this is definitely going to give a bump up. Stock did very well yesterday, by the way. Metro Brands and Bata, etc. So today it's taking it a bit easy in that sense. BSE is up 4% now, just FYI. We'll take another quick commercial break here, but as we do that, just want to leave you with some sound bites on the automobile space. Here, of course, there has been a big change which has happened, and across the analyst community, this is one space where I think there is a fair bit of excitement as well in terms of what can happen to demand. Listen in, take that break, see you on the other side.
Ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption. And this is something that should in some ways create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall. So that is the reason why we feel it is a very important milestone for our economy and sets it up in the right way.
If I have to summarize what's happened for the two-wheeler industry, I would say it's a tactical hit. This GST reduction is a tactical hit. But it's a strategic miss. It's a tactical hit because, obviously a big fillip for, let's say, almost 98% of the domestic industry with this significant reduction in GST. But at the same time, the 350cc plus motorcycles, where Royal Enfield and Bajaj are the biggest players. This is on the one hand just 1% of industry, perhaps about 4% by value. So both Siddharth and I had appealed to those concerned, that this is just 2% of the industry, and let's have a uniform rate.
Certainly, the small car segment is the big beneficiary.
it will, I assume, from the 22nd of September onwards, our expectation is that we will start getting into about 10% growth a year instead of the current stagnation and decline.
Okay, all right. Well, let's get Vinay Rajani, Senior Technical as well as Derivative Analyst of HDFC Securities, back on the show. Hi, Vinay. Good morning. Good to see you, Vin. Well, markets are holding on mildly onto the gains. The problem yet again is the Nifty Bank. It continues to underperform. What is the fresh trade you'll make on both the indices? And then fill us in with a couple of trading calls.
Yeah, good morning and thanks for having me on the show. So definitely there has been some profit booking in the bank nifty since morning, but the breadth of the market has been quite good. Some of the auto stocks, some railway stocks have been performing well since morning, and breadth, I can see the small cap index and mid cap index have been doing well despite the mute performance after opening in Nifty. But overall, I still feel that though there was a selling from the higher level in yesterday's session, but still we can say that we are down but not out from yesterday's high. But yeah, 24,500 is a very strong support for the Nifty, and unless that we see a close below that, we have a hope that again the resumption of an uptrend. On the upside, the momentum will be back in the Nifty once we see close above 50 days EMA. 50-day EMA is placed at 24,800 odd level, so above which we can expect some momentum to come back. Overall, FIs are quite heavily short, and I think 24,800 is a resistance above which we can expect a sharp short covering. So that is a conditional view on the market. 24,500 on the downside, 24,800 on the upside, and overall bias is positive. Stock specific bullish move could continue to do well. So as far as bank nifty is concerned, bank nifty is also finding support around its 200 days EMA. No doubt it is not performing as of now. We are waiting for the breakout, and breakout level is above 54,450. So 54,450 is a resistance, which is yesterday's high, above which we can expect momentum to come back. But overall, yes, it might happen that after some underperformance, bank nifty will also come and participate in the market. As far as trading calls are concerned, I can see some strength building in the auto ancillary space. So endurance technology is looking quite good. Placed around 2990, one can go long. Around 2930, one can keep stop loss. On the upside, I'm expecting a target of 3100. The second pick I would take is the KEI industry. KEI industry is placed around 4100, around which one can trade long. 4,000 should be the trading stop loss. On the upside, I'm expecting a target of 4250 on a couple of sessions.
All right, Vinay, thank you very much for that. So that is the calls which are coming through at this point in time. Vinay, just a quick, it's got enough trading history. MobiKwik, is it coming up to important kind of levels here? What's the view if you have?
Yeah, so I cannot open the chart of it, unfortunately. I have to check it, so I won't be able to help in that. Sorry for that.
Okay. What about Ola Electric?
Yeah, so after a stellar rally, it is facing some profit booking. The 200 days moving average is placed around 58. So it has run up a lot, and buy on dip should be the view. There has been a buying with a huge amount of volume in previous days, but now it is into a profit booking mode. 58 is a very strong support around which one can again look this particular stock for going long.
What about BSE, Bombay Stock Exchange?
Yeah, so BSE has taken support at very crucial moving average and bounced back. I see some strength building up. Today's stock is up by almost 5%. Volumes have been quite good. The next resistance around 2,400. But yes, there is a pullback rally, and I'm expecting it to continue. So yes, with a trailing stop loss, one can go long. So it is not into a positional uptrend, but definitely with a stop loss of 2227, which happens to be the today's low, one can go long, and we can expect some good gains in the short term also. So trailing stop loss should be the strategy, and overall we can expect the extension of the pullback.
Okay, all right. Thanks a lot, Vinay, for joining in and giving us your quick take on a lot of those stocks as well as on the index itself. By the way, before we slip into that break, pull up Brainbees Solutions. The stock in the last 1 year is still down close to around 40%. But you know, earlier this week, there was massive delivery-based buying that we saw on the stock, both in percentage terms as well as in absolute volume. And in fact, as we speak now, that stock is up close to around 7%. Doesn't take away from the fact that if you pull up a 1 year chart, you'll still see that the stock is down 38 to 39% or thereabouts. But in today's trade, massive volume is what we're saying. And we saw delivery-based buying earlier. Vascon's another big underperformer. But the volumes today are extremely high on that counter as well. A smaller company, Big underperformer, seeing a bit of a bounce, in this morning's trading session, up close to around 7.5%. 1-year chart will tell you the picture. Stock is still down 25, I think, or 30% or thereabouts. So keep an eye out on a couple of these names. Well, we'll slip into a short break. On the other side, Manisha is waiting. We'll turn our attention from the equity market to the commodity space.
Welcome back. Let's shift focus to the commodity markets now. Manisha is with us in the studio. Manisha, what's on your radar?
Well, I'm looking at sugar prices because, while gold and silver are trading near all-time highs, metals doing well, energy has continued to decline, and that in some sense has put pressure on the sugar prices. So when you look at the international raw numbers, we've seen 5% of a decline come in for the raw sugar prices on a week-on-week basis, and we are down by 18% in this year so far. Last year also, it was a negative year for the sugar prices, where we saw a decline of around 14%. The reason for this constant pressure on the prices is, one, that there is selling pressure from funds. So that perhaps, if that turns around, you could be looking at some support. But currently, we are trading below 16 cents a pound in the global markets there. The second thing is about expectation of an ample global supply going forward, especially for 2025-26 as a season in the global markets there. You're looking at higher production, not just from Brazil, but for the Indian markets, where we are anticipating an year-on-year 18% of a surge in sugar. And Thailand, which is the third largest producer of sugar, is also looking at very strong numbers this time around. For Brazil especially, which is the biggest producer and exporter for sugar as well, this time around, instead of ethanol, they have increased sugar production from 49.15 in the last year to 55%. So there is that much sugar coming into the global markets from Brazil as well. So when you look at the global sugar production, the overall numbers there, last year was around 186.6 million tons. Of course, there are various ranges from agencies, anywhere between 180 to 189 on the higher side as well. But this year, we are looking at the second largest sugar production. These are USDA numbers. They are anticipating 189.3 million tons of global sugar production this time around. The consumption numbers also, by the way, have continued to gain up. These are the International Sugar Organization numbers. So while we are looking at a sixth year of deficit in case of sugar for the coming season as well, but last year the deficit was 4.8 million tons. This time around, just about 230,000 tons. So we are looking at a considerable increase in sugar production and inventories in the global markets there. When you look at the Indian markets, well, as I said, 18% higher sugar production anticipated this year. This is on the back of favorable monsoon, increased acreage, and higher sugarcane prices. The FRP, remember, was increased 4% previous year, and the last 3 years we've seen constant increase in the fair and remunerative price when it comes to sugar there. This is what we're anticipating in sense of sugar production. ISMA has put out a number at 34.9 million tons. National Sugar Federation puts it at 35, and so has Crystal Ratings as well, saying that around 35 million tons of sugar production is what we could be looking at in the coming season there. Interestingly, while you have 5% on sugar and mithais, 40% on carbonated drinks is something that the industry really seems to be working on right now. So the expectation that you would be looking at demands increasing for mithai this festival season, but sweetened drinks is something that could see a decline, as we've been talking in the last few days.
Okay, all right. Manisha, thank you very much for that. Well, with that, let's move to some individual stocks that are in news. Vinny is joining in with the latest on Zydus Life. Vinny.
Hi, good morning. So we're seeing Zydus Life that's buzzing in trade today. Why? Because Zydus Life and as well as Synthon has entered into an exclusive licensing and supply agreement for ozanimod capsules in the US market. Now, what is the treatment of these capsules? This is mainly used where there is going to be some immune system damages in nerve cells. This is what this capsule is used for. What does this agreement, or what is the total addressable market size of this? First, let's talk about that. That's at around $637 million in the US, and this is as of July 2025 data by IQVIA. Now, Synthon BV will actually be responsible for obtaining all those final regulatory approvals that is required for these capsules. They will look at manufacturing and supplying as well. What will Zydus be doing? Zydus will manage the commercialization of this drug in the United States market. Now, do not forget, what is the positive that comes in here is that Synthon is one of these first filers for the generic version of these drugs, and that is why they will have a 180-day exclusivity period. So in the short term, Zydus Life will also see the benefit of this coming in from the agreement.
Okay, all right. Thank you very much, Vinny, for that. That's Zydus Life in Focus. Swiggy, Eternal are something we want to put the attention back on as well. Mangalam is here with reasons. Mangalam, over to you.
Well, last couple of days, there were a lot of news and regulatory announcements that have come by on all these delivery platforms, including the likes of GST and increase in platform fees, etc. Set all that aside, Motilal Oswal believes that the next few quarters are actually strong for all these companies, because they believe that a perfect storm that these companies went through over the last few quarters has now given way to strong tailwind. So they've upgraded Swiggy to buy. They have a target price of 560 rupees on the stock, implying a near 30% plus upside from current levels. Eternal too, they have a target price of 420 rupees. They've raised food delivery growth estimates for both these companies from earlier 19 to 20% to about 21 to 23%. And not only have they raised their growth estimates, they've also raised their target multiple from around 27 times EBITDA earlier to about 35 times. So that has caused them to raise their expectations and the stock price return targets as well. But more importantly, even for quick commerce, they have brought forward their profitability assumptions. They believe that contribution margins for both Instamart and Blinkit will recover meaningfully over the next few quarters. So they are betting big on the food delivery and quick commerce space.
Well, markets have cooled off. Mangalam, thank you very much for that. These are stocks in focus. 24,750 is where we are at, which means there's about, 14 odd points left. Not very much at all when you look at where we started yesterday. So same kind of trend, a little higher, but eventually a market not being able to hold on as we go into the next few hours of trade. We're going to take a quick commercial break here. On the other side, it's our special segment, Indianomics. My colleague Lata will have Neelkant Mishra and Ashish Gupta joining her. They talk macros, markets, and the implications post the GST cut. Coming up in just a bit.